So welcome back everybody. In this video I decided to make a little, let's say, statistical mathematical approach how you can actually verify whether your bot is making some profits or not. I believe and I know that many of people are making bots and they're not succeeding with them. Making neural network bots, making some kind of AI bots, making some sort of strange bots, and they are not succeeding, especially when you're making a bot with fixed targets and fixed stop losses, even also with the stop loss and the trailing target. So in this video, I want to give you a mathematical approach where you can actually verify whether a bot is making profits or not. So imagine, not like imagine, what I want to recommend to everybody is that understanding that exchange itself or trading platforms itself is basically not, I classify them to be not predictable for a human mind. Maybe an AI can do it, and I think it can do it. But here on the traders.ai you can actually rent and have profitable trading bots just to start with. But anyway, I'll show you a mathematical approach how you can actually, how can you actually be more certain or be more aware that this what you have is making profits or not. So I'll write you down a couple of rules. Rule number one is have at least 100 and plus trades done. So basically, you have a bot that has done at least 200 trades. And second is at least 90 days old. So your bot has to be at least 90 days old, meaning that he has went through specific market conditions. Third one, whether your bot goes only longs or shorts doesn't matter, but have the opposite market condition tested out. So basically, test it out in large pump and dump. Large, I mean, like, have your bot tested through whether those 90 days have passed. Test your bot through a large dump or a large pump. Meaning, like here in the chart, you see there was a large pump. Of course, your bot will be positive if it goes longs only. And test your bot in large short, like bear market. This wasn't a large bear market, only 50% drop, but still, um, have it live tested. And it doesn't matter how you make it, but have it live tested throughout a scale of these numbers. Now that's the first thing. Now, when like normally you would want to bot at least 1,000, 2,000 trades done, but like 200 is it's the absolute bare minimum to start with. So okay, that's when you start. Now the next thing is um, you need to have parameters. I will write down need to have. First is average trade time. Second, average trade target profit. So for the average trade time, it's around the time, let's say 10 to 30 mins. Let's say profit is how much profit per deal the bot has taken. It could be around from 1 to 2%, right? So the average trade time, average profit. The third is down drag, or some call it downdraft. It's also in range in percents. It could be around from 5 to 15% for a bot, for a normal bot. Normally, average random buy. I will talk about random buy later. And fourth is I call it prediction scale, but you can do without it. It's like a prediction ratio. I'll tell you how you can calculate a little bit later. So now let's get to approximates. What is a random buy? A random buy is basically uh, you make a bot that just buys completely random. Buys like every 5 minutes, every 10 minutes, every 20 minutes. Buys doesn't give a I'll call it doesn't give a shit where to buy. It just buys no matter what the condition. That's a random buy. So basically, a random buy is buy always. So for a random buy statistics, first is average Average trade time is approximately 1%. Target is, I guess it was around 24 hours. Average trade profit, so an average profit is around 1%. Down drag is around 30 to 50%. You will never get more than 50% down drag if you buy randomly. Although you can get around 70%, but if you split throughout many markets, many coins, split your budget, you will never get more than 50%. You can get, but by average, no. Ratio prediction is approximately one. Is approximately one. So what it means is that you have a prediction ratio of 50 to 50, meaning that half of your trades are positive, half are negative, and eventually you will earn nothing. You'll basically lose a profit. You will lose on slippages, you will lose on commissions, and profit is basically minus 0.25% per trade. And you will get these statistics when done approximately 3,000 trades. You'll get these numbers. So now that you know approximately random numbers, you need to verify. How can you actually distinguish you have a bot? You need to have these statistics, and now you need to verify whether your bot is something random or something, I mean like random, whether your bot is profitable or not. Here is losing on trade. So the first thing is you have all these parameters set up. Then you have these parameters that you need to have. I mean, like statistics for the bot. You need to have these, and then when you have them, you can verify whether, because although those bots can be positive, but they can have huge down drag. I mean, down drag is a down drag is when a bot starts making trades, what is the absolute lowest that he went on a trade? I mean, like you buy, let's say, BTC on USDT market, you gave $1,000, and BTC went down by minus 50%. You have a down drag of 50%, meaning you have $500 in your account right now. And then you went up by 120%, and means like you have $1,100 now in your account. I mean, like you ended up having $1,100 in the account. You earned the profit is $100. You spent to get those $100. You spent average trade time was 28 days. You earned 10%, risked 50%. So that's the statistics. So basically, that's a random buy. Yeah, 28 days on 10% targets is you're getting lucky. Normally, you have like a month or more. So profit against risk is pretty low. It's pretty low. It has to be opposite. So a bot has to have down drag at least not more than 10%, and profit 10% plus. That's the statistics that you need to have. Average trade time depends on your target, of course, your profit target, of course, your trading target, of course, but the less you can have, the better. The less you have, the better. So ending it up means 5 minutes. Ending it up means that for 1% target, average trade time would be around, it needs to be around 5 to 30 minutes. At that moment, you will have a good trading, but it actually depends pretty much on the volatility of the market. But it's not about the volatility, it's about all these ratios together, parameters together. And prediction ratio. Okay, I haven't talked about prediction ratio. Prediction ratio is a historical So basically, what we have is that many traders and many bot makers make bots with trailing targets, with dynamic different stop losses, uh, with different targets, and they completely randomize out their prediction score. I mean, like they don't know actually how precise is the bot. A prediction ratio is basically when you take those moments when the bought the deal and put out a series of results, like he bought it at price, let's say at 12 o'clock, and with a price of $12, and now did he ended up like a 1% target, 1% stop loss, and did he end up profiting? So meaning like the bot bought here, and did this trade uh, was a profitable trade or losing trade? And you take out all those at least 200 plus trades, and you chart them down by a fixed target and fixed stop loss. How actually did your bot predict the outcome? So normally you will have a ratio of 50 to 50, meaning equals 1, but you should start paying attention when the bot has a ratio 1.5 to 2.5, meaning that it's approximately 60-40 to 66-33 prediction score, meaning that two trades go positive, two trades go negative, and then you have a result of 1 against 1 target stop loss ratio 2.5, for example. 2 against 2 stop loss target, you have a ratio of 2.2, for example. 5 against 5, you have a prediction score of 1.8. Now, when you have these results set up, you see that actually the bot is pretty good at predicting 1.1. I mean, like 1% target and 1% stop loss is actually pretty good. But the larger target, larger stop loss, the precision drops down, and meaning you have a recommendation from your statistics that this bot is more precise on smaller targets and smaller tighter stop losses. So this is the way of validating actually your bots. So this is a recommendation. You can use how much target should the bot use to be more precise, and these are the statistics you can use. You can actually filter out whether your bot is profitable or not. So this is not something really complex. This is actually pretty easy to do if you have an automated systems that the trader.ai CoinPal provides. So I hope you guys succeed in making profitable bots, and I really want to make out and tell you that it's not that easy, and especially I think nobody actually can predict the prices where the market is going. Maybe AIs can, but still they go out with precision ratios like 1.6633, 6040, and that's a really good results. But still, you will not get anywhere far with just a fixed target and stop loss. Now that's a different lesson. But anyway, guys, thank you for listening to this mathematical approach. And I really do know that many people have watched too many YouTube lessons and so on, and they don't actually know what I'm talking about here. But when you get into automation part and trading automatization, it will take you a long time to find out actually how to make profitable bots online. So that's actually a big scientific approach. I mean, like scientific project. So I hope this video was useful for you, and see you guys soon on a maybe different video. Bye.